Welcome to SIRA MCQ YouTube channel. Today we discuss advanced level A-level accounting paper 2024 question number 43. This is the calculation relating to LK16. Look here. What are the requirements? Requirements is there. State the following as per the LK16 property, plant and equipment. Okay, let's see. Look at the firstly we concentrate the dates. Look here, depreciation expense okay, for the year ending 31st March 2022. Next one, cumulated depreciation as at 31st March 2023. This is 2022. This is a depreciation expense. This is a cumulated depreciation expense as at 31st March 2023. Next one, depreciation expense for the year ending 31st March 2024. Okay, there are 3 years related to this question. Look here. First one, Chatu PLC purchased the machine for 6 million. 6,000, no? We use the 1,000, no? 6 million on 1st April 2021. Look here, next one, no? Estimated useful life as 5 years. I noted that all this information they acquired 1st April 2021. Okay, 6 million means 6,000 rupees. There is 6,000 rupees. The useful lifetime is 5 years. 5 years. Okay, there is a 5 year. There are 6 million means 6,000. The purchase day is 1st April 2021. Okay, let's see. Next one, the company depreciate its machine reducing balance method. Okay, at 40% per annum. Okay, there is a depreciation method is reducing balancing method 40% per annum. On look here date 1st April 2023, company revised a depreciation method of the machine to straight line method. Okay, there is a change the 1st April 2023. After how many years? There is a 1st April 2021, no? The change was after 2 years. Look here, the changing is 1st April 2023. There is another year was closing at 1st April 2022. This is the first year. This is the year 1. This is the year 1. This is the year 2. This is the year 2. After 2 years, they change the depreciation method to straight line method. At that time, you can think from to this date, what is the depreciation method? Reducing balancing method. Reducing balance method. This year and this year, okay, we use reducing balancing method. After that, 1st April 2023, we change it to from to straight. This is the straight line method. Straight line method. This is the straight line method. We apply 1st April 2023 from. Okay, look here. They said that method and estimated its residual value is 0. No residual value. Before this change, there is no residual value. No. Next one, there is no change in the useful lifetime of the machine estimated in 1st April 2021. There is a, you think about that, there is a no change in useful lifetime. You know, there is a useful lifetime is 5 years now. There's a 5 years at the purchasing date. They said that useful lifetime of the machine estimated 1st April 2021. You know, 1st April 2021, there's a 5-year estimation from to state. Okay, at that point they said that there is no change in useful lifetime. What are the requirements they request? Firstly, use identify depreciation expense for the year ending 31st March 2022. Depreciation expense for the year ending, this is year expense 31st March 2022. 31st March 2022 means this one. Year ending 31st March 2022. This is year ending, the end. What is the opening date is there. This is the first year depreciation. Okay, how can we calculate? You know what is the method? Reducing balancing method. How can we calculate annual depreciation? Annual depreciation using the reducing balancing method. Okay, depreciation cost minus residual value. This is the percentage. No? Therefore, after that, this depreciable value, we using this formula, we can find the depreciable value. After that, we multiplied the percentage. Percentage is 40%. Okay, there is a cost is 6,000. There is a no residual value. No, therefore I use the 6,000 multiplied by 40%. We can identify there is a 2,400 annual depreciation for year one. Annual depreciation was 2,400. Okay, this is the equation. Okay, and we can write it easily. First year 22. First year there's 1,000. No, 2,400. What's the next request? Cumulated depreciation as at 31st March 2023. Cumulated depreciation, the sum of depreciation as at 31st March 2023. There is a collection of depreciations. Which date? 31st March 2020. This date was 2022. This date was 2022. No, they request us the cumulated depreciation as at 31st March 2023. Look here. 31st March 2023. 31st March 2023 annual depreciation. The changing was done after this date, right? Change was done 1st April 2023. Therefore, 31st March 2023, there is no change of reducing balancing method. Therefore, the first year depreciation was done. No? We find the cumulated one. Cumulated means sum of the depreciation. Therefore, we find this one. Okay, this one depreciation, 2 year, second year depreciation. How can we calculate? This is the annual depreciation. No? Therefore, this is the I write that first year there is a we can use this one. This equation is actual one is the reducing balancing method. No, annual depreciation is the actual one. The first year there is the same to straight line method. Look here, this is the this is minus opening cumulated depreciation. Okay, next. Okay, at the first year there's a cost there 6,000, there's a no residual value. After that we minus opening cumulated residual value. There is opening cumulated depreciation. There is a no opening cumulated depreciation as the first year. Okay, there's a first year depreciation. No, there's second year, there's a opening cumulated depreciation was there. Why I write this cost minus residual value again I minus opening cumulated depreciation and multiplied by 40%. At that time there is a cost is 6,000. No, 6,000. Residual value is 0. Opening cumulated depreciation is there. Why? We calculate the depreciation to second year depreciation. At the second year depreciation they want opening cumulated depreciation. What is the amount? There is a annual depreciation was done at the second year. The cumulated depreciation was this amount. Why? After the depreciation, what's the double entry? Depreciation expense debit, cumulated depreciation credit. Cumulated depreciation account was created 2,400. Why? Annual depreciation was linked to cumulated depreciation. At the second year, opening cumulated depreciation is first year annual depreciation. Therefore 2,400 I can identify as opening cumulated depreciation. After that I can multiply it by 40%. Look here, after the deducting this amount is 2,600 multiplied by 40%. What is the answer? 360 multiplied by 4 means this one. Okay, 1,440. This is the annual depreciation of second year. This is second year. Okay, 1,440. This is the annual depreciation. We can identify second year 1,440 the annual depreciation. We want cumulated depreciation for 31st March 2024. I can add this one, opening cumulated depreciation. This is 2,400. I add this annual depreciation. We can find the cumulated depreciation as at 31st March 2023. We can find 3,840 as a cumulated depreciation. Okay, cumulated depreciation as at 31st March 2023, 3,840. This is the answer. 3,840 is answer for B, cumulated depreciation as at 31st March 2023. Next one, how can we calculate depreciation expense for the year ending 31st March 2024? Next year depreciation, how can we calculate? This is relating to straight line method. How can we calculate? We use the lengthy annual depreciation calculation formula. Annual depreciation, why there is a already depreciated. Okay, annual depreciation, this is a straight line method. No, therefore I use cost no new asset value. Okay, that's a change in no new asset value means there is a no revaluation there. There's a after the revaluation relating to this one, we must cost or revaluation value to this asset value is cost or revaluation value. there's a no revaluation, no, there is a, we can use cost, no, cost. Okay, we deduct residual value. This is a new residual value, new residual value. There's a residual value was changed, we use the new residual value. After that we minus opening cumulated depreciation. Opening cumulated depreciation. Why? They already depreciated 2 years. Okay, therefore I divided new remaining useful lifetime. Look here, there is a asset is no change in 6,000, there is a no residual value. The opening cumulated depreciation is, there is a 2024 year, no, 2024. Therefore 2024 year means this year. This is the opening date of 1st April 2023. We want 31st March 2024 after the year. This is next year. Okay, at that point what is the opening cumulated depreciation is there, the 31st March 2023, no, this is the opening date of 31st March 2024 ending year. At that point we use the cumulated depreciation 3,840 as a opening depreciation of 2024 current year. Therefore 3,840 is, look here, are you agree with this? This is the new calculation of depreciation area. This is our year. 31st March 2023 is opening date, 31st March 2024 is closing date. We want opening cumulated depreciation. This is the opening cumulated depreciation is 3,840 for this year. This year opening cumulated depreciation. Therefore, this is the remaining. There's a depreciable value is the top of that. Why? 6,000 is the cost. We already depreciated 3,840. After that we use we can find the answer of 6,000 minus 340 means 2,160. We can use the calculator, no? Calculator. Let's see. 6,000 is a cost. We already depreciated 3,840. Answer is 2,160 was remaining depreciable value. Therefore, we divide in remaining useful lifetime. What is the remaining useful lifetime we can use? Look here, there is a remaining useful lifetime at the opening date. There is a 5-year estimation, but we already year 1 is done, year 2 is done, there are 2 years done. After that the remaining is 5 minus 2 years was already depreciated. Remaining lifetime is 3. Okay, 5 minus 2. Therefore we can use the remaining lifetime is 2y 5, the already depreciated 2 years, remaining is 3,160 divided in 3. Why? 2,160 was remaining depreciable value. We must divide in remaining useful lifetime. Therefore we divide in 720. Okay, 720 is current year depreciation was year ending 31st March 2024. Okay, this is the current year depreciation 720. 720. The current year depreciation. 720 is depreciation. 720. Okay, this is the answers. There is a calculation. No. Next video we silver revenue recognition. This is 44 question. In next video we meet question number 44.